Hey guys, welcome back to Upside Down Data. Let's talk about Immutable X and where it is heading next. If you're not familiar, Immutable X is a layer 2 protocol built on top of the Ethereum blockchain, and it's built for gaming. That's really the way that they are marketing themselves now, to get Web3 games to come and build using Immutable X as the infrastructure. So if a game required NFTs, those would be on Immutable X. If there were tokens involved, those would be on Immutable X, so on and so forth. So one of the things that makes IMX really interesting right now, in my opinion, is what's going on around the election. So of course, Trump won. And one of the things that Trump has promised to do is to weaken regulation around crypto, or at least provide regulatory clarity. But either way, it should be a more favorable condition for altcoins generally under Trump than was the case under Biden. Gary Gensler is going to be out at the SEC. That alone should relieve some of the pressure. And Immutable X was actually threatened with a lawsuit from the SEC very recently. And so one of the possibilities is that with Trump coming in and change of leadership at the SEC, it's very possible that this lawsuit will never actually materialize. The SEC will give up on this and they'll never actually end up suing Immutable X. And of course, that would be great for IMX. So that's one of the things, when you see this big dump in price, this was driven in no small part due to that news of a Wells notice, basically that intent of suing or possibility of suing by the SEC coming to light. Now, IMX has started to rebound, but it's still a little bit muted. But I do think that if the regulatory pressure eases, then that takes a lot of the headwinds away from IMX and leaves the upside much more open than was the case before the election. So if that's possible, so if IMX has room to work with through the upside, let's talk about where it is right now from a data-driven perspective and what we might expect and look for going forward if it is able to put in some meaningful rallies. So the first model I want to talk about here is our short-term upside downside potential indicator. This is one of our risk models that we have at the channel. Higher values mean higher risk, lower values mean lower risk. And so basically this model cares about moves that play out over days to weeks, so much shorter term in its time horizon. And you see that we had gotten up to the top part of the scale here through this run that we had going from late 2023 all the way into 2024. But then it's reset overall. And now we're sitting at a much more reasonable level, just above -2, -1.57 right now. So in the short term, if IMX wants to put in a run, it's starting from a pretty good spot from a risk perspective. And if it goes on a major run, I would expect the entire top part of this range to be in play and for it to actually get up to these really high short-term risk levels. So sitting pretty good from that perspective. And if we look at long-term risk, so this cares about moves that play over months to multiple months, a little bit longer as time horizon, similar story, not quite as low right now, about -0.33, so just below neutral zero. But again, I'd expect this entire range to be in play, and that could be something that spans a longer time horizon to get up to that point if it goes on a major rally. So from a risk perspective, it's sitting at a reasonable place, especially if we're about to go into a full-on bull market. You don't tend to see really low risk levels often revisited during those full-on bull markets. You tend to, at best, see dips below zero as reaccumulation points before continuing off to the upside. So if IMX is really ready to go and break above the highs from March, for example, and then just go off and set new all-time highs, these kind of levels might be the best we expect if that's about to happen. So something else I wanted to talk about, and something that's, I think, pretty unique that we have at our website, polaritydigital.io, link in the description. That's where I'm showing you these metrics. We actually have on-chain data for IMX as well, and that's what I'm showing you here. This is short-term realized price. So realized price is basically the cost basis for the group that you're looking at. So this is short-term, as people have been holding IMX for 180 days or less. And basically, this is their aggregate cost basis, their average cost basis. So people have been holding for that period or shorter. What is their cost basis? And this is useful for telling what is the kind of shorter term tenor of the market. Is it bullish or is it bearish? If you're above the short-term holder realized price, that's bullish. If you're below it, then that is bearish. And it often will act as either support or like resistance, like we saw here, as you get to it. Now, what'll be notable is that you'll notice we're currently below the short-term holder realized price. So most people who've been holding within that window are actually in loss right now. But if we see price rally up to this level and actually break above it decisively, then that would suggest that we might be entering into a shift in the market. Instead of this downtrend, this kind of mini bear market we've been in, we might reverse to a bullish phase in the market. And maybe we actually be able to flip this into support the next time we come back and revisit it. So I'm going to be watching this closely. Can we flip this? And then especially, can we turn it into support the next time we touch it? That is really something that I think is going to tell us if we are now in a new bull market. But breaking above and staying above is going to be that first sign. Now, zooming out a little bit, we can also look at the total realized price. So this is the aggregate cost basis for everyone. So every single IMX token holder, what is the average cost basis? And what you'll notice is that we're right around that cost basis right now. So on aggregate, across all holders of IMX, on average, we're actually at neutral. Now, what's useful about this metric is, for one thing, we know from assets like Bitcoin, for like Ethereum, for any asset that's successful in the long term, when you dip below this total realized price, that tends to be a great value zone for acquiring that asset. And we see that we actually just dipped back below it on that news of the SEC Wells notice right over here earlier in November. This seems like it could potentially be that. And we've gotten now back above it. It's possible we're going to do something like we did here and really start to pull away from it. In a full-on bull market, that's what you'd expect. Now, the other thing you can look at with this metric that's really useful is it also gives you a sense of what are the longer term holders doing. When you see this start to trend up, it suggests that people have been holding IMX for a long time who bought in at lower prices are starting to sell. Basically, you're losing these lower cost bases and they're being replaced with higher cost bases, leading the average to go up. So in full on bull markets, one thing you can look at that suggests that the top might be near is when you see this total realized price really start to move aggressively to the upside. That suggests that people who bought in earlier at way lower prices are selling out aggressively. And that is a sign that you're getting towards the end of a run. Usually when long-term holders exit, the market doesn't have much further to run before it ends. People are taking profits, and then at a certain point, things get too overextended, and then price will eventually correct or crash into a new bear market. So we're not there at all yet with IMX. We've drifted up a little bit here where some of the people who bought in at lower levels are selling, but this is not nearly as aggressive as what you tend to see near tops of market cycles. So if we are going to go on a big crypto bull run, a big altcoin bull run, and IMX really benefits by this loosening of regulatory pressure, then I'm going to be watching this to see when does it start moving up aggressively. We're not there yet, so that's a good sign right now. So the final narrative thing I just wanted to talk about is that if we are going into an environment with much looser regulation around crypto, I do think that Web3 gaming is a very interesting space where that could happen if we don't have to worry about the SEC. With gaming, there's a lot of things that you can imagine games doing, Web3 games doing, that they wouldn't have wanted to do in the old SEC, or technically the current one under Gary Gensler. For example, imagine a game where token holders actually get a cut of the revenue from that game. That's interesting, right? That gives people a reason to play it, or at least a reason to invest in it that they don't have right now. Web3 games don't do that because it would just be labeled as security immediately by the SEC. They'd be sued, and it would cause all these problems. If there's a lot kind of looser regulation or way less appetite for the SEC in the future to do that kind of thing, or just be a lot more lenient about that kind of thing, I think you might see gaming really start to be creative in how they manage their tokens, or what they use their tokens for, or what utility those tokens have that can make them much more attractive investments than they are right now. And so I think Web3 gaming is potentially an interesting sector to watch. Now, obviously, we don't know if that's going to happen yet, but that's something I'm going to be watching, that if some of those narratives start bubbling up, if they start getting more adventurous and adding more utility like revenue sharing, things like that, that would be one thing that I think would really potentially catch on, especially if IMX is able to get some more popular games built on top of it and then do some of that creative kind of stuff. Then you can imagine that things could get really wild. So to wrap up, I think IMX is in a very interesting spot. It's one of those assets that had been under a lot of regulatory pressure very recently. That seems to have been lifted. And so it wouldn't surprise me for there to be some reversion as the market prices in what IMX might look like without that regulatory pressure. And then beyond that, watching narratives around Web3 gaming, I think, is going to be important. IMX is going to live or die, succeed or fail, based on whether or not Web3 gaming really catches on as a big narrative in this next cycle, assuming that this run is going to continue. Obviously, the things that could derail that are things like recessions, so on and so forth. Assuming we don't get anything like that and that we do continue onto an altcoin bull run, it's those types of narratives that are really going to be the main impacts on whether or not IMX succeeds. Can the things it's positioned itself to be for, in this case Web3 gaming, can that catch a large share of the narrative of the hype? And if it does, I would expect IMX to do very well. And I think we're sitting at a place right now, just from the different on-chain data and from what our models are seeing, that it's at a good spot for entering into a next possible phase of a bull market. So there's going to be a lot to watch, but it's one that I am very interested in. I would not be surprised. We saw this big wick up today as we record. I would not be surprised, for price to track up and then break above that, and at the very least go back and retest these highs from back in March. Not financial advice. We'll have to watch to see what happens, but I think it's going to be a really interesting one to watch. All right, if you like the content, subscribe to the channel, give the video a like, and follow us over on X. A lot of updates for our models and more over there. And go to our website, partydigital.io, to see live data for our models and more.